Hello, my name is Nicole, and I'm going to be talking to you guys about the 5 minutes of financial literacy, a guide for college students. I'm just going to do a little basic rundown. I'm going to try to keep it under 5 minutes. So the first thing that I'm going to talk about is your credit reports. So this is the financial health of your basic credit. So just some important key facts. It has all of your past and current debts on it. It shows the actions against your unpaid bills. It's needed for employers, leasers, and insurance. The next thing I'm going to talk about is your credit score. So it's always important to keep it between 300 and 850. Above a 720 is ideal. It's also called a FICO score, which is for Fair, Isaac, and Company. You can also get your free credit score online every year. So what determines your credit score is these 5 little steps. So 35% is payment history, 30% is your outstanding debt, 15% is your duration of credit history, 10% is the number of inquiries, and 10% is the type of credit outstanding. Always important to know what those are and how they are important to keeping track of your credit score. The next thing is a little fun facts for you. Good and bad credit scores stay with you for 7 years. After that, they kind of retransition to what your new scores are. Personal bankruptcy stays on your credit for 10 years. Bad credit means no jobs, no lease, and no insurance. Then you're entitled to the free 1-year credit. Some tips to help you with your credit card purchases. Always keep balances low, below 50% of the total limit. So if your limit is $1,000 a year, just stick with 500 or less. Also, do not put debt on another card. Keep interest low, and always report lost and stolen credit cards. You don't want somebody to take those and then you're paying for whatever they're buying. Alright, we're going to get to basic budgeting, which is pretty important. So goals for budgeting. Always pay off your debt. Always, always, always. Create an emergency fund, 3 to 6 months of living. If in case something was to happen, you have at least 3 to 6 months of cash to make up for it. Save for retirement and decide your financial goals. This should always come before your wants and your needs, so figure out what's important, what's not. How to make a budget. You can always go online, so you can go to a template. Microsoft Word works best. You can grab all your blank statements, calculate monthly income, break down your monthly expenses, and subtract your expenses from your goals, and that should help give you an idea of what you need and what you want. Some tips: always keep your receipts. If you have a little envelope in your purse, just keep it there and you can just shove them in there. I know in my wallet they're crammed and then I end up throwing them away. It's always best to just keep a little lockbox. What else? Always report your holidays, because when Christmas comes around, like next month, you're always going to want to make sure that you have enough for that. And now I'm going to be talking about purchasing a car. It's always very important. So some terms that are important is manufacturer suggested retail price. The only suggested price, it's not with the price of the company. This is when you want to negotiate and try to go below their price. Annual percentage rate is a yearly rate you're paying in interest. Rebate is money offered by manufacturer for price payment to car. So this could be a special offer they're having, so like $30 off of $100. A down payment, an initial payment made when buying a vehicle. So that's just basically a deposit you're going to pay. And the dealer, cost higher than banks and credit unions unless special financing rates offered. So you're always going to want to know your dealer. If they're a sketchy dealer, don't go to them. If they're a good dealer, you probably want to work with them. So I made some pros and cons of lease and buy. So with a lease, you're going to have to pay the car to get reconditioned, and you'll have to pay for every mile you have, but you pay less cash up front, and you don't have to worry about your car's mileage. But you'll have to pay for every mile that you put on it. But when you buy a car, it may be more favorable, and there's no restriction on your mileage, but the con is if you can't afford it, you can't buy it. So there's new and used cars. The importance of a new is you'll be the first owner of the car, which is always fun because you have that new smell. But you have higher monthly rates and insurance rates. If you get it used, it has lower purchase prices and is cheaper insurance. A few miles left to use it, no maintenance work, and higher finance rates are some of the cons. Some tips to when buying a car: determine if you can afford it. Financing is not your only option, and always check your blue book if you're going to trade in a car for a new one. Look at the market value and don't feel pressured to always negotiate. Alright, mortgages. So, a mortgage is a loan that pledges the purchased property as collateral, so it's unpaid for, so that's where this is important. A fixed mortgage is an interest rate. It's fixed for life on the mortgage. The pro of that is a fixed rate and fixed payment for the duration of whatever the mortgage year is. Cons may have higher rates than risk mortgages. And then an adjustable mortgage is interest rates can change based on benchmark rate. The pro is to receive lower initial rates, and the con is that risk rates go up and the rate is adjusted. So you always got to just make sure you understand your basic vocabulary of this. Systematic overpayment is always pay more than your payment amount. So on a mortgage or loan, notes, always just, you know what, if you have the money, drop it down because it'll always be better in the long run. So to avoid mortgage errors, always buy in your price range, affordable, estimate the cost, and avoid becoming upside down, meaning you just couldn't do it with the money. So there's the importance of knowing what you're looking at when you're an adult is your credits, your cars, and your housing. So I think the most important thing that you should realize is how much money you put into a credit card and how you're going to determine how you're going to set that out, pay for it, and understand what you're actually putting your money into. For a car, it's always important to look at, is it better to buy new or is it better to buy used? And for a house, is it important to buy? Is it important to rent? Is it important to know what the mortgage is? And important to know that you can afford it. The big main thing of this assignment is just know that you can financially afford something. Thank you for watching. Have a good night.